All right, so good morning, everyone. We're going to get started. It's 11:01. I want to be respectful to everyone's time and make sure we get on with the show. So welcome to our Alliance Leads this morning. We'll have a discussion in regards to the Paycheck Protection Program. It will be an interactive session, so please, we encourage your chat to come through the chat function, chat to everyone so that several people will be watching that chat, making sure that we either answer your question during the presentation or at the end during the question and answer piece. So I do want to thank our sponsors this morning, and namely our presidential sponsors, the Brain Health Initiative, Grapevine Communications, Kerkering, Barberio CPAs, who are with us this morning, Manatee County Government, the Players Center for Performing Arts, Wright Technology, Sarasota Memorial Healthcare System, and Williams Parker, Harrison, Dietz, and Getson. We have other sponsors as well as a new sponsor coming on this year in the presidential level, the Bank of Tampa. So you can see our other levels, executive, corporate, and associate levels on our website. With that, I'd like to introduce Kathleen Hargreaves. Kathleen is a CPA and certified financial planner, and she leads the KB, Kerkering Barberio Healthcare Consultants. Her practice is in the area of individual and business tax consulting, and she and her team are dedicated to providing the best practice service solutions to healthcare industry and specialties around that industry. Kathleen had joined the firm in 1992 and was admitted as a shareholder in 1997. Kathleen, welcome this morning. We truly appreciate your time and energy put around informing our members and even some non-members in regards to PPP, and the floor is yours. Thank you.
Thank you. And I'd like to let you know that I've got two colleagues who've joined me, Aaron Hentrick and Ashley Salter. They're for the Stump the Chump questions that I know you're going to ask. In case I don't know, I'm going to just throw the floor over to one of them and see if they can answer those questions. As Dom said, we lead the healthcare team, and so we've been involved with probably assisting over 200 PPP-1 applications on the application side, and of course we're working on the forgiveness side as well. And honestly, it's those of you who got your PPP-1 probably remember the stampede to the money that we experienced back when this program started. Dom was just sharing that he's just now applying for PPP-1. But those of us who initially were involved with these programs, it was a morass. And I think I'll remember that the time period, just like I remember any other big news event. So we're going to talk about first just the changes in PPP-1, because most of you have already applied, and many of you have actually started on the forgiveness app. So we did have some changes, of course, with the new CARES Act. So let me start. So the first change, it's tax-free. Now, my colleagues will say it's always been tax-free, but we weren't able to take the expenses associated with those. And the CPA community just debated for months and months about when we took them, when we didn't. So finally, Congress just clarified that by letting everybody have this money, and it's truly tax-free, and the expenses are fully deductible, and they're going to be deductible in 2020. The other big news, and this is all from the changes to CARES, which I'm going to call CARES 2, which passed in early 2021. So this is truly new news. The covered period has been clarified. And what's the covered period? That's the period that's your test period. beginning on the date your PPP loan was funded and ending either on the 8-week or 24 or somewhere in between that time period. We did have the in the reporting, we had to report on that 24-week extended period if we went extended, but now we're able to report when we've used the money. And this is going to be very important for strategic purposes. And I'm going to talk about a credit. It's part of the last presentation, but I want you just to remember that the covered period has been clarified and it does make a difference. The other big news is the EIDL advances are not going to be subtracted from the forgivable PPP amounts. So let's just take a look. Under the original act, the submission was for 8 weeks or 24 weeks, and now it's when satisfied. And as I said, it makes a big difference. The EIDL advances, many of you got those. It was up to $10,000 or per company or $1,000 per employee. That was a reduction from your PPP amount, and now you get both of those fundings on a forgivable and tax-free basis. The other big news, and banks were waiting for this, is that there's now a simplified forgiveness process for loans under $150,000. So I've got this form to show you. It's a one-page form. It really looks like the one, those of you who are under 50,000, it looks almost exactly the same. They just modified it. But the good news is there are no detailed calculations of forgiveness that are on the form. You don't have to support any of your numbers. The bank is just going to take your attestation right to the SBA. You're not subject to the required reduction due to a reduction in gross pay or FTE headcount. And that was, again, for those of you who remember the headaches we had trying to feed the amount out of the bank account and making sure we kept everybody, and they've just thrown that out the window. The documentation requirement, though, has not changed. You're required to keep your employment cost info for 4 years and all of your other PPP costs for 3 years. Now, our best practice recommendation is that you actually work through the long form, keep all of this documentation, put it in a very, very safe place, because while the SBA does not intend to audit this, you could still be audited by another governmental body. So this is what the new form looks like. It's the 3508S. It was just revised. It just has you put down whether you're getting a first draw or a second draw. So you know if you got PPP2 or intend to, this is what's in store for you. You need the loan number, the loan amount, employees, covered period. So it's very simple. And then you have to attest, and it's probably in DocuSign, so you don't even have to do much there. But you do have to attest that you're using the PPP for the eligible proceeds, that you satisfied the amount that was supposed to be used for the payroll costs, and that your forgiveness amount is correct. And there are stiff penalties if you fib. So hopefully you have all those documents and can satisfy that 150 requirement. So the questions we're getting, I don't know what's in the chat, but we've already fielded lots and lots of our clients' questions. What do I need to do if I've not applied for funding yet? So Dom's getting his application ready. It's open until funding runs out, and it doesn't seem to be the mad dash it was before. But but March 31 is the end date. And of course, you make your application directly through your banker. You know, nothing's changed in that application process. So what do I need to do if I submitted my loan forgiveness application before the new act? And many of you have done just that. If you receive full forgiveness and your loan's been satisfied, you take no action. Nothing changes. If you receive partial forgiveness because you had an EIDL advance, nothing is needed. The SBA should automatically remit the advance amount and give you any additional interest. If you submitted but have not received forgiveness, what do you do? And this is the majority of you are in this bucket because the banks began pausing all of their applications in anticipation of exactly what happened. And of course, they couldn't do anything without this new form or the processes. So right now, I mean, you can go ahead and check with your banker if the poor man or woman has a minute to spare. They're so busy. Just find out where your application is in process, and they're just going to move along. For the most part, they're having customers fill out the new forms, and then they're just processing. Okay, so again, this is just to reiterate that we believe that you should go ahead and calculate that forgiveness as if you didn't have this new form. Do it the right way, make sure you retain those records and lock them down. Okay, here's a good one. What if I'm not forgiven for 100% of my PPP? And that's happening with some of our clients. The PPP loans have an interest rate of 1% and have a maturity date of 2 or 5 years, depending on when the loan originated. But the whole intent was that you would have 100% forgiveness. So our experience is, unless there was an error in the original funding, and that did happen, you know, it was going fast and furious and there were some mistakes made, you should really be able to retain 100% of the PPP. Okay, so let's talk about PPP2, and that's going fast and furious. We're helping clients with PPP2 right this minute. And I just want to mention on the PPP1, it's some of those calculations are very, very complicated. We've actually delegated the task to a couple of people just so we know that we're getting them right. So if you have any questions, I do recommend that you talk to your CPA or banker to help you with some of the math that's required. All right, so in order to be eligible for round 2, you must have previously received PPP1. Now you still have that opportunity if you're one of the few that either couldn't before because of the requirement or just didn't. You must have fully spent the first PPP loan. That doesn't mean that you needed to be forgiven, but you need to really, the calculation should come out that you don't have to repay anything. So if you haven't bothered to do that calculation, better hurry on and do that. Your business had to have been operational before February 15th, and you needed to have 300 or fewer employees. And this is down from the first round funding, which was 500 employees. The max loan is $2 million. There are a couple other things I didn't put on the slide. The big news, I always put it in red, you had to have a 25% reduction in revenue for any quarter of 2020 as compared to 2019. Now the PPP amount doesn't count. So when you're looking at gross receipts, the one thing you don't have to do is worry about the PPP that you got. And you also must sign a needs attestation. And that's the same attestation we just talked about, but it's going to be a little more important in round 2. Now, we had to really check on what gross receipts were when we were looking at this. We went ahead a couple weeks ago and took our clients and calculated whether they would be able to qualify for round 2 just based on the gross receipts test. And before that, we had to figure out what gross receipts were. So I actually put this slide in here, and I'm going to go through this because it's important. It's all revenue in whatever form received or accrued. You go, if you normally report on the cash basis, you look at the cash basis. If you report on the accrual basis, you look at that basis. It's from whatever source, including sales of products or services, interest, dividends, rents, royalties, fees, commissions, reduced by returns and allowances. You have to add back cost of sales, but you get to exclude capital gains and losses. They do not include taxes collected, such as sales taxes, or it sounds like things that you're holding in escrow, collected by a travel agent, real estate agent, advertising conference manager, all other items, including subcontractor costs, reimbursements for purchases, investment income, employee-based costs, such as payroll, may not be excluded from gross receipts. So it's a big deal. You need to make sure your tax returns are in line with the way you're reporting these. You know, think about the future if you're ever audited. The one thing that you can exclude, though, is your PPP loan funding. Okay, we want to just really make sure everybody understands needs. And even when we send our, you are eligible, you still have to meet the needs attestation requirement. You have to make a reasonable good faith determination of need. You must assess your ability to access other sources of liquidity. And you need to maintain records such that you could support your position if a federal regulator were to question you about it. The loan amounts, most folks are just going with the same bank, and they don't have to fill out all this extra paperwork because the loan amounts are the same as what you would have gotten from the round 1 funding. You can use an alternative period, which is 1 year before the date on which the loan's made. It's a big hassle, but you know, I suppose it could work to your benefit. The max is $2 million. If you have the NAIC code 72, which is the bar restaurant area, you actually get 3.5 times your average monthly payroll cost. So there's an increase for that one sector of our economy, which has been super hard hit by this. Eligible wages are pretty much the same. They added life, vision, dental, and disability for both PPP 2 and 1. Everything else is the same. Remember, wages over 100,000 are annualized, so you can't use more than that. And also, you need to remember, if you're in an affiliated group situation, you need to count that affiliated group with all of these eligibility tests. And I do think that the SBA is pulling those in particular. You do have to disclose whether you're in an affiliated group role on the applications. And I think they're looking for that just based on the feedback I'm getting from certain clients and our partners are getting. They did add some non-payroll costs though, so we have some other things that we can use. And remember, I encourage you to use this now to look to other than payroll costs when you're thinking through your forgiveness applications. So you can use supplies, worker protection expenditures, property damage from those riots that occurred in certain cities that were not covered by insurance, operation expenditures, business software, cloud computing, anything that facilitates the business operations, and particularly remote working. And so this is just PPE. So they've added a lot of additional expenses that we weren't able to get with the first round. So when you look to the forgiveness, 60% of the loan has to be spent on payroll costs. We were finding when we did the forgiveness applications that we didn't need to use anything but payroll if we were using a 24 week period. That was strategically smart before, but now that we have some other potential payroll tax credits, I want to focus you on your strategy of how you are actually utilizing payroll versus other coverage, other potential covered expenses. So we know we can use an 8 to a 24 week cover period. So as soon as you spend down on that 60%, you can cut off your covered period. The wage and employee reduction levels need to be reversed by the end of that covered period. So that's a consideration for everybody. One of our staff members provided this flow chart. So if you wanted to take just one slide from our round 2 information, you could probably print this off and you'd have kind of everything you wanted to know about, but we're afraid to ask for PPP2. This is the second draw application. You can see it's really like the first, not too much different. You can see they boxed in, Erin Hendrick did this for us, and she boxed in what's changed. So mainly, if you're going to the same bank, they're really just asking for documentation for that gross receipts test. So again, it's a quarter by quarter test. So any quarter, if you made just one quarter in the year, you met that piece of the testing. So I've had questions like, can we use any 3-month period? No, you have to use a quarter. So really what we're finding is that banks are having, if you can print something out from your own software, they're just having you sign it. The regs do say that if you're under 150,000, you don't really need to submit anything like that. But my experience is that the banks are just getting it done now, so they don't have to, have to do anything. So I'm gonna leave the PPP2. I don't know that I have any chat questions. Looking around, okay. And we can answer anything else at the end if you have other issues. I want to go into 2 really important things, and that's the payroll credits that we're getting. I actually talked to your group last year, and part of my presentation included these payroll tax credits, and I spent a lot of time on the family leave and sick leave credit and hardly any time on employee retention credit. And this time I'm going to do exactly the opposite. I'm not going to spend much time on family leave and sick leave because you've now had, almost 9 months of experience with that. And I'm going to focus instead on employee retention credit. So as I go through here, if you do have questions that I'm not addressing, just let us know through chat and we'll take them in Q&A. So This is a big mouthful. Families First Coronavirus Response Act, which is FFCRA. Otherwise, what we're getting out of that is the family leave and paid sick leave payroll tax credit. So this is the credit for paid leave to either recuperate from COVID or care for a family member who had COVID, or to, care for children who are out of school. It was mandatory unless you were an excluded provider. So what's happened is that they have extended the credit opportunity into 2021, but made it voluntary. And you can see that important change because I made it red. So I have gotten a couple of questions already from my clients right away. In fact, I was very impressed that they were paying so much attention. Should I do this? Let's go through what the credit is. It's 100% of qualified wages, plus you get 1.45% of the employer Medicare. They're exempt from Social Security taxes. And this applies in instances where, your employee is having a problem, right? If you provided this benefit in 2020, but then you stop it in 2021 and people are still getting COVID, having family members with COVID, and you tell them you're not going to do it, I just think it creates kind of an HR problem for you. And since the government is going to pretty much reimburse you and reimburse you very quickly, I don't know what the downside is. So I'm probably going to get a lot of chats now for that soapbox, but I just feel like it might be the right thing to do, and you're getting paid for it. And you're getting paid so quickly. If you have a qualified wages paid today and you've got a payroll remittance tomorrow, you're going to take that money right back into payroll immediately. So you really don't need to be out unless you've got, of course, an employee who is making more than 200 per day for family, or 511 for sick. Max care to others is 200 a day. So there's a wage test for each one of these absences, but again, it's totally voluntary, totally discretionary. But I can tell you that several administrators called me within the first week about this one.
Kathy?
Yeah.
We've got a couple questions in the chat about these related to independent contractors and whether or not independent contractors can take advantage of this credit, as well as could they take it for their contractors they are paying.
So, Ashley, do you want to just respond to that? Ashley took this on as one of her special services, so she's actually responding to our clients. So I'll let you take it.
Sure. So right now these credits are pertaining to employees, which would be those W-2 employees. Of course, all of this has been changing, and the IRS has not yet updated their frequently asked questions for the latest act. So potentially this could change, but at the moment this relates to your W-2 employees. And the family and sick leave, that was good regardless of PPP, whereas the topic Kathy is just going to jump into now with the employee retention credit, this is changed if you received PPP.
So, right. Thank you, Ashley. So when I said I was going to take time on the employee retention credit, and I really glossed over it last year when we talked about it, It's because really we just didn't have that many businesses that could take advantage of it. So it wasn't allowed for any business that took PPP money, and that was just about everybody. In my practice, we used the employee retention credit only twice. In 2 instances, we had ineligible employers. They couldn't take PPP money for various reasons. And so we used it 2 times. To their advantage, it's a great credit. So I'm going to go ahead and talk about this credit right now. And I anticipate we should have lots of questions. Okay, and this is our summary slide. This is the slide you can take away for the employee retention credit. And I'm going to talk about really 4 aspects. First of all, the changes, the eligibility requirements, the actual credit amount, and then qualified wages. So we're going to try to knock through some of the definitions so that you can tell whether or not you're eligible, and also strategically how you can run this credit through with PPP. Because the important thing to remember is you cannot take it during the same period you took PPP funding. So for instance, remember I said in a covered period, you may want to shorten your PPP covered period to leave you more time that might be eligible to take the employee retention credit. So first of all, you had to have experienced one or the other. And I'm going to back up for a second too. We see this as a huge opportunity for 2020. We can go back to 2020 now and release this credit in addition to perhaps being eligible in 2021. But in our practice, most of the eligibility, and I'm going to say almost 100%, is going to actually come from 2020. If you're in the restaurant or the, NEIC 72 business, you're probably still experiencing declines and you may be eligible in 2021. But for our practice, which is mainly healthcare, we're finding that 2020 is our opportunity. So first of all, operations had to have been fully or partially suspended due to a governmental order related to COVID-19. And then there's an or. So it's one or the other can get you there. You have a gross receipts decrease of more than 50% in 2020, or they have a lower bar, more than 20% in 2021, compared to the same quarter of 2019. And I have a little client tip, because I actually gave this talk before, to look into this one. We've actually got, again, a designated pool of people that are just looking into this for our clients. Okay, so on the credit amount, how much do you get for 2020? It's 50% of qualified wages paid between March 13, when COVID went public officially, through December 31, up to $10,000 per employee per year. So you get a max credit of $5,000 per employee, because it's 50%, right? In 2021, it's 70% of qualified wages. So the money ante just went up, and it's now, the test is per employee per quarter. So you get a max credit of $14,000 in 2021 and $5,000 per employee in 2020. So you could potentially, if you were able to do this in both years, 5 plus 14 is 19,000 per employee. Okay, so that's a big deal. We did a quick look at a dental practice that was closed. They had to close during COVID by governmental order, and it was a small practice, and we know that they're going to get 17,000 back. So that's why I'm encouraging everybody to really look at this. Okay, so it's what's qualified wages. Now, there are a couple different tests in this, so you do have to pay attention. You get wages paid while employees are not providing services if you have over 100 full-time employees in 2020 or over 500 in 2021. But if you happen to be an employer with under 100 employees, then in 2020, you get all wages. So, and that includes health insurance. So for instance, just take a couple examples. My daughter works with a restaurant group, and they have over 100 full-time employees. And so in 2020, they were forced to lay off, or, you know, most of their waiters and wait staff, but they continued to pay their health insurance. So they would be able to recover this for the health insurance portion for those employees. So for other businesses, if you're under 100, I mean, you get that whether they're working or not. So no double dipping. If you received money under family and sick, the one we just talked about, you can't take this. And you can also not take it for the period of time that your employees are actually under that covered period for PPP. So, I mean, just looking at raw dates, if we have March 13th, most folks didn't actually get PPP until like May, the first week of May. Unless you got absolute first round funding, but most people missed the first opportunity, got in on that second opportunity. So they were funded sometime in late April, early May. So that period of time is probably something that almost everybody can get if they were under a governmental order to shut down either fully or partially. It definitely includes most healthcare, or specialty healthcare, I should say. Okay, so the second test is that significant decline in gross receipts. So when does that start? It starts on the first day, this is confusing, the first day of the first calendar quarter in which the gross receipts fall below the base percentage, which is 50% for 2020 and 20% in 21, and you're comparing it to 2019, okay? So, I mean, I guess if you weren't shut down because of a governmental order, you probably still, unless you were in certain sectors, experienced a large decrease in gross receipts. Now it's measured quarter by quarter, so you'd have to look at April, May, June of 2020 versus April, May, June of 2021. And it ends on the first day that gross receipts are more than 80% as compared to the same quarter in 2019. Okay, this is our little, and I hope you can see it. I know on my screen I've got the, just gonna move this over. So we took, and Ashley did this for us, we took the retention credit as published, and then we X'd everything out and put the new rules in for for what's happening right now. So if you're listening to this, I mean, you're probably thinking, well, if you did PPP2, you would know whether you had a significant decline of more than 50%. And if you happen to be in a business that was shut down either partially or fully, you would know that time period. So get busy and start looking at that differential between the shutdown and the funding, and you're probably going to find some money there. I'm just going to skip over this. All right, just a few things to talk about. You do need to consider affiliated ownership when determining the employee count. So you have to look at anything, it's a 50% affiliated group test. So you need to see if your company is owned by, you know, if you've got multiple affiliated businesses, you have to look at all of them together. Teleworking, the IRS specifically says that if someone's teleworking, so if they're able to work, it's still working. So that doesn't count as not working. If an employee is terminated in receiving separation payments, if you're in the large group category, those don't count. And related individuals on payroll, which believe me, we all thought about right away, that doesn't count either. So, and those related individuals, you know, include lots of folks. So, in thinking about how we can look at this, especially for 2020, what we're going to do is look at our March 13th date and look at that first funding of our PPP. And if there's an opportunity there, either because you met the gross receipts test or the governmental shutdown, you probably qualify for this credit. On the back end, same thing. If you have months after you satisfy your PPP covered period, and that's why I'm saying you may want to shorten the covered period from the 24 months and use some of the other expense sources like, you know, rent and utilities and those other sources, so you can shorten that covered period if you happen to meet the gross, the deficiency in gross receipts. You can also use them in the back end when you're not covered with PPP. So that's our strategy. As I said, we really believe that many companies are eligible for this, and it's kind of in the CPA world really as big this year as PPP was last year. Maybe not the same bucks, but the same, you know, similar opportunities to look back and determine whether you're eligible. So that's kind of the overview on what's happening in the stimulus world. And if anybody has any additional questions, we're ready to respond to them.
Kathy, there is a question about the sole owner businesses, and I think we probably want to clarify what sole owners can do for PPP versus what they can do for payroll tax credits. I believe that's two of the questions that have come in.
Okay. You know, we also had a couple other questions before we go into that. We had a couple questions from some of our clients, especially on the employer retention credit. What do you do if you maybe just purchased a business, or, you know, somehow you don't have the opportunity to look at 2019 versus 2020? In the instance where you've either started a business or purchased a business, the IRS lets you go back to relevant periods in 2019. For instance, if you just started a new business let's say you started it in June of 2019, you would use that quarter as your base quarter for the January through March, and then, March through June quarter. And this is similarly, if you just purchased a business, the IRS will actually let you go back and use the former owner's information in determining a deficiency. So let's talk about the PPP funding for sole proprietors. That's so in the PPP 1, we're looking at basically tax return information. So your earnings are your Schedule C earnings, and so that's the same thing as wages if you're if you're a W-2 employee. And they have different rules for partners as well. So that's how you determine those. Now for PPP 2, the determination of whether you have a deficiency, again, you're going back to 2019 and looking at that, although you have the opportunity for 2020 too, but I don't know how you're going to report it. For the employee retention credit, that's a payroll tax credit. So I'm not sure how you're going to actually get that if you're a sole proprietor. Ashley, you might know that answer.
Right, as it stands now, for the employee retention credit, you'd only get that if you, as a sole proprietor, have employees that you're issuing W-2s to. So you'd get it for those employees, but not for yourself as a Schedule C owner.
Yeah. And that's unfortunate, but, and that's one of those things that could change, because it's really not fair. So I would hold out hope that the IRS might change that. You would have to get that credit, obviously, when you filed your federal tax return, because that's when you're actually paying the payroll taxes. So do we have any other questions? Want to say thank you and shout out, though, to all our banker friends who are processing these PPP 1 and 2 loans and doing the forgiveness applications at the same time. I know they're working hard. So, all right. If we
Kathy, it
don't,
doesn't look like we have any additional questions. One last chance for the audience. Any additional questions for Kathy? No, then Kathy and team, I truly appreciate what you do for our members. A lot of them that you are, that you have as clients, and helping the other members here today as well. So thank you. You did this last year, you did it again this year, and we continue to work to assist those to make it through and find the other side of this healthcare issue. So a couple upcoming events, January 28th, we have a new series called The Blitz, where we're showcasing some sensational leaders. In the first 5 events that'll be coming up, we'll be using our Sandy's winners as those. So January 28th at 9:15, and also on February 9th at 9:15. Both of those can be found on our website. And we have in between them an Alliance Online Happy Hour on Thursday, February 4th at 4 p.m. So the couple of events that you should be putting on your calendar, be on a lookout for. And Kathy, again, thank you so much for your time this morning and the energy you and your team put into making sure our businesses succeed in our region. Again, thank you.
it was our pleasure, Dom. And if there are any other questions, we're happy to answer them offline. A lot of times you think of things once you actually dig into your own data. So just let us know.
Yep, we'll do that, and if we get them, we'll pass them on to you and the team. So thank you, or we'll get the information, your information into their hands so they can contact you directly. Again, thank you to our members, and we hope to see you all soon. Have a great day.